Welcome to the IEA Podcast. My name is Lesh. I'm the head of public policy here at the IEA. Each week, this podcast will ask a tantalizing policy question to a top economic and political thinkers. Today's question, are tax cuts inflationary? Rishi Sunak and Liz Truss are billing to be Britain's next Prime Minister. A central dividing line in the campaign is whether now is the time for tax cuts to renew the British economy, or are they risk doing more damage? To answer this question, and for a broader discussion about the state of the Conservative Party leadership race, I'm joined by economist Graham Gudgin. Graham is an honorary research associate at the University of Cambridge, a visiting professor at Ulster University, and a former special advisor. He's author of a large number of books, reports, and journal articles on regional economic growth in the UK and on the growth of small firms. Graham, welcome to the IEA Podcast.
Thank you.
This week, Graham, you signed a letter with some other economists to the Daily Telegraph backing timely, targeted, and fully affordable tax cuts. Why do you think now is the time for tax cuts?
I think now is the time for tax cuts because the situation for ordinary households is so difficult, particularly with energy and food price rises. My view of this is that the Chancellor got it right during the pandemic. He kept people associated with their workplaces, and the people's living standards didn't fall through a very difficult period. But as soon as the lockdowns finish, he then decided that we must start quickly repaying back the money that had been borrowed. For various reasons, I'll explain in a moment. I don't think that was the right decision, and the timing was wrong. I mean, my view of this is that the inflation we have is really associated with the pandemic. A lot of it is supply side. It's due to supply shortages and difficulties in a lot of our import suppliers, mainly China, difficulties in shipping and huge increases in shipping costs. This is all associated with lockdowns and the pandemic. My view is that the Chancellor should have viewed this as an extension of the pandemic and continue to subsidise, particularly families in particular difficulty through this period. And the idea of we must get on in a hurry and start to repair the public finances, I thought was, I don't know, somewhere between impatient and imprudent. I mean, it's not necessary in my view.
So the counter argument there, of course, Graham, is that, well, now is the time for government to get its fiscal situation back in order. If we reverse the NI cuts or bring forward the income tax cuts, that's actually going to be demand stimulating in the context of restrained supply side issues. It'll just end up being inflationary. It won't actually do that much good for households. It's going to undermine the UK's economic position. It's not, I suppose, to use Rishi's phrase, to borrow it for a second, it's fantasy economics. What makes you think that it's not necessarily going to have that level of negative impact?
The first thing is, I think our current inflation problem is temporary and passing. You know, it's due to unusual circumstances, and it will go away. I mean, the OECD's forecast is that in most OECD countries, the inflation rate will be way down next year, down to about 3%. They seem to suggest that the UK will take a little bit longer, but even by the end of next year, they're talking about 4.5%, as the supply problems rectify themselves. So this is a situation where I don't think we need to panic. The inflation will go away, and the position on public debt isn't all that bad. If we subtract, or if we ignore for the moment the proportion of debt that's actually owned by the Bank of England, which is a department of government, I mean, it's one part of government holding the debt of another, then our debt to GDP ratio is only about 82%, 83%, and the OBR think it'll gently go down, perhaps within 5 years, to about 80%. Now, that's a lot higher than the 40 to 50% we used to have. But on the other hand, it's nowhere near Italy's 130%. It's something we can live with and we can deal with gently over a number of years, in my view. No need to rush on with this.
Yeah, it always does seem a little ridiculous to me to suggest that trusted tax cuts, which amount to something like 40 billion, are going to have this huge inflationary impact in the context of broader government spending and monetary policy decisions. There was, Rishi was quoting Patrick Minford at one point saying perhaps interest rates will go up to 6 or 7%. And he was suggesting, Minford was saying that would be a consequence of the tax cuts. I think Minford was making a broader comment that interest rates should go higher because they've been quite low. That potentially does some economic damage in terms of the creation of zombie companies and inefficient industry. If interest rates are too low, it has a whole lot of distortive effects. I think Patrick Minford then clarified he actually meant 2 to 3, maybe 4% interest rates. Do you think that that it would be a positive step for the broader economy if interest rates were a little bit higher? And then I suppose then the natural question then becomes, what does that do to households, particularly obviously those with mortgages? Is that then unaffordable for a lot of households if interest rates go up that much? I suppose it's kind of separate to tax cuts, but it's just a broader economic question.
Yes, I think it's reasonable to assume that interest rates over a range of years will normalise. I mean, for 5 or 6%, Patrick Minford said up to 70% would be normal. He wasn't predicting that, or he wasn't saying that was necessary or that would happen soon, but he was outlining that as a sort of normal level. And the reason for having interest rates at a normal level is you can then use interest rates as a policy tool. I mean, when they're zero or negative, they're not having any effect. And we've got a Bank of England Monetary Committee, which is rather, choose my words carefully here, but perhaps rather pompously met every week, every month for years, and then decided to do nothing because there was nothing to do.
Would have been a great little job to be on that particular committee for.
Yeah. Perhaps their productivity will raise if they actually do something.
Well, exactly. We're going to fix the productivity problem.
Yes. So having normal interest rates is something I think most economists would assume will happen and should happen. But again, it's something we can't do very quickly. I mean, people have taken on a lot of debt. Companies have taken on a lot of debt over this period. So if interest rates were to rise very quickly, some companies at least would be in trouble. I mean, one view is we have a lot of zombie companies anyway, which have only really managed to remain profitable because their interest costs have been rock bottom. And as soon as interest rates start to rise, a lot of those will go. And perhaps that is the case. I mean, my own modelling on this suggests that if interest rates were to rise, say up to 5%, I mean, it doesn't make a huge difference to the growth of the economy, but it will, of course, make quite a big difference to some companies and some households.
I want to get your thoughts on the news that's come out later this week from Rishi Sunak that he, in fact, will go ahead with at least one immediate tax cut, which is cutting VAT on energy bills. That was called by the Trust campaign a screeching U-turn. Do you think that that's a good approach to tax cuts to focus in on the specific issue of VAT on energy?
No, not really. I think Rishi Sunak got it right the first time when he made 2 points. First, he said it wasn't guaranteed that companies would pass on any reduction in VAT. They would pass it on to households. Secondly, it was too wide a measure. It wasn't targeted on the people who really needed the benefit. I mean, I think those were fair points. And therefore it is something of a screeching U-turn and unnecessary. I don't really understand why the problem particularly of high energy costs in low-income households, the impact of those costs on low-income households isn't being dealt with through the social security system. I mean, you'll remember that everyone on universal credit got a £20 a week temporary up rate during the pandemic, and then that was stopped immediately when the pandemic was felt to be over. But as I said earlier, I don't think the effects of the pandemic are over, and I don't see why that couldn't have continued. I mean, the real problem here, I think, is the costs, is the impact of high energy and food costs on low-income families. So let's target it on them. And the VAT cut isn't well targeted, and therefore isn't not in my view a very appropriate measure.
Yeah, I mean, the VAT cut effectively gives a huge subsidy to the biggest energy users, the richest households. It gives them a large amount off their energy bills without necessarily being particularly well targeted. And the other one that I think we haven't discussed as much, but is quite important, which is that Truss's intention to not go ahead with the increase in corporate taxes. I think this is the best argument that the Truss campaign has for why tax increase is actually quite economically damaging. Under Rishi's current plans, both ending the super deduction, although that might not necessarily end up happening, but certainly ending the kind of investment incentives within some of the investment incentives within the tax system, as well as putting up the rate from 19 to 25%, would see the UK really fall down, according to the Tax Foundation, in the international corporate tax competitiveness. And corporate tax has a particularly big impact on where firms decide to invest. Ireland's famously been very successful putting down their corporate tax rates. Do you think that there's a decent case to make that, at least according to the Truss people, that if you want to encourage investment, you have to keep down corporate tax and not put it up in the short run, particularly as the pandemic is coming to an end?
Yes, I do. I think that's sensible. I mean, it seems to be the idea of raising the corporation tax rate from 19 to 25, 26% in one go always seem rather outrageous. I mean, one of the principles of raising taxes is you do it in small bits so that it doesn't have a huge immediate impact. The corporation tax rate used to be 30% under the Labour government, and was brought down by Tory governments. And I think the plan was to get it down to 18%. It got down as far as 19% and stopped. And I think the view, then, this is a view that's been promoted among others by David Smith in the Sunday Times, was that big tax reduction didn't work. It didn't increase. It didn't do much to increase investment. And indeed, company investment hasn't increased very much. But these have been very strange times over the last few years, and it's hard to see. I mean, I think if you look internationally, low headline corporation tax rates certainly do work. Countries, you mentioned Ireland, Singapore would be another. Companies with low corporation tax rates do attract investment. Certain Swiss cantons do that. When Cadbury's chocolate firm was sold to an American company, the first thing the American company did was move their headquarters to a canton in Switzerland, within days. So the corporation tax, I think, does matter. I don't think in general lower or higher taxes affect the rate of economic growth very much. It's a bit of a figment, this, I think. But the one that is likely to have an effect, can have an effect, is corporation tax. For the obvious reasons, it's paid directly by companies. Can I make a point about Ireland, though? This is something that I've looked at quite a bit over the years. I mean, Ireland has one of the world's lowest corporation tax rates, 12.5%. For all companies, manufacturing and the service sector. And it has managed to attract investment from a lot of, particularly American high-tech companies. I think of the 20 biggest tech companies in the world, I think 17 of them have represented in Ireland. But when you look at this in detail, it doesn't seem to have raised living standards in the south, which on my calculations are still below Northern Ireland. I mean, they're still below pretty well the poorest regions in the UK. Now, that's not what's shown by the headline national accounts figures. But one of the bad or unfortunate effects of very low corporation tax in the Republic is it's completely distorted the national accounts. the GDP figures of the Republic tell you almost nothing about the Republic's economy. Some American economists say that Irish national accounts tell you much more about the tax affairs of American companies than they do about the Irish economy. So there are lots of problems with very low corporation tax, but it's not just the rate that matters. The Irish have done all sorts of other things which allow and encourage multinational companies to swish a lot of their global profits through the Republic. And a lot of that money doesn't really rest in the Republic. It just sort of swishes through washes through the accounts. So there are problems with corporation tax, but in general, I think a lower rather than higher corporation tax does attract foreign investment. Again, my own modelling suggests it's not a game changer by any means, but it's not a bad thing to have something which will attract more rather than less foreign direct investment.
Just broadening out the conversation a little bit into some of the other policy discussion we've seen during this campaign. Obviously, it seems that the main dividing line is on this question of cut taxes now or cut taxes later. There does seem to be general consensus among leaders that the UK economy is in need of reform. Rishi said he's going to be a big Thatcherite reformer. Lesh tries to talk about supply side reforms to reinvigorate the economy, taking advantage of Brexit, et cetera, et cetera. I don't think we've seen a lot of detail necessarily on that front, on what they actually want in practice. Maybe it's been too short a time. They haven't had the ability to run along. They haven't had the capacity of a long period in opposition to develop policies and then come to the electorate and propose them an election. They've had mere weeks to try to throw together some ideas in their policy development. But I'm wondering, what do you think of what the other kind of pronouncements we've seen from the leaders, and is it a bit shallow and missing in detail to you, and what would you like to see?
Yes, no, I absolutely agree. I think it is shallow and it is lacking in detail, and in some ways wrong-headed. I mean, the first thing to say is, look, we like many other European and indeed North American economies, we have a real problem on the slow growth of per capita GDP and productivity, particularly since the banking crisis in 2008. I mean, hardly any growth at all. So our economy is going nowhere. And this, by the way, I think is a key factor in all the problems we see in the public sector, in the health sector, in education, in policing. If the UK economy had continued growing at its rate before 2008, and it had continued growing right up until to date, the economy would be about 25% larger. And therefore tax receipts would be that amount, 25% larger. More money for the health service, for the NHS, for education, courts, police, everything. So governments are having to try and run the public sector, run things like the health service on a diminished budget. And this is having effects all over the place. Therefore, to get the economy growing is an absolute priority. But it's a problem across much of the advanced economies of the Western world. And in my view, it's not well understood, hardly understood at all, I think, by the economics profession, and therefore very hard to do anything about this. And to resort to slogans like, perhaps suggesting that lower tax will make a significant difference is just misleading people. I mean, I think we need to admit that this is a difficult problem. It's not well understood, and commit to trying to understand it in an honest way and avoid the slogans. I mean, returning to Thatcherism is ridiculous. If you look at the figures, per capita GDP grew more slowly in the Thatcher period than it had in the previous Labour and Tory governments. It didn't grow faster at all. We may praise or agree with a number of things that government did, but we can't say that it accelerated economic growth in total. I mean, the first thing it did was was generate one of the biggest recessions we've had, and generate unemployment rising to 3 million, or if you include the people who transferred onto invalidity benefit, perhaps 4 million. So we have a real problem here. We must do something about it. A lot of it probably is supply side, but an awful lot of it is a Western problem. And I think our policies relative to China, the fact that so much of our manufacturing has been transferred to the Far East and so on, are large parts of this. And that tells you immediately that this is a problem that we probably can't handle on our own. It's got to be a combined thing with the EU and the US. It will take a long time, and it's very, very difficult. But I can see that that's not a message which is going to win you a Tory leadership campaign, or it's easy to explain in a short debate.
In my mind, at least, surely there are some reforms within the UK's grasp that could boost productivity and prosperity. Something major that comes to my mind, which I haven't heard much about during this campaign, is the planning system, which by restricting the ability of people to live where they might be most productive, and making it just far more expensive into people's cost of living in terms of housing, is probably a massive drag on productivity. And the UK economy could be much bigger, despite all the other factors, if it weren't for that, even just that one issue. Some people have said the UK economy 20% bigger, and that might be a bit of an exaggeration, but at least a chunk bigger, if we didn't have such a dire lack of housing. Or to take a kind of more micro example, the planning system not enabling enough factory and workspace to be built around Cambridge in the high-tech space, that for a lot of companies really pushes them out or makes it much more difficult to operate in the UK as a result of the inability to get the physical space they need to operate. Do you think that those kind of reforms, although it might be politically difficult to achieve, could have a quite large impact?
Yes, there's certainly something to say about that, but again, complex issues which needs targeted reforms, in my view. The planning reforms, I think, that are most needed are those on large infrastructure problems. I was reading an article earlier today on the plans to expand Felixstowe Port in Suffolk, just how long it's taken, and just how difficult it is in the UK. Third Heathrow runway is another example. So reforms are needed there. I think it's much too easy for people or opponents for these schemes to slow things down. All views must be taken into account, but surely it can be done far more quickly than we do it in the UK. So on that side, infrastructure problems, big commercial developments, I think we really do need to move to a system whereby timely decisions can be made. On housing, I think it's a much more difficult issue. My understanding is there's a large overhang of unused planning permissions. It's not a matter of giving more planning permission. The developers have plenty of planning permissions, and then there isn't enough speed of building. It may be other things that accompany the planning permissions, including rules and agreements on infrastructure, water and drainage provision, and all sorts of other things. Perhaps there are reforms that could come in there, but there are probably things that the local authorities could do anyway to speed up that sort of development. I live very close to a lot of the high-tech building in Cambridge, and there's been an awful lot of it in the last few years, new buildings going up everywhere. It's not obvious that commercial development in Cambridge has been slowed down. Certainly, more housing could have been built. What happens in a place like Cambridge is the price of housing goes up, pretty close to London levels. A lot of the people working in the high-tech companies can afford that housing, but it's people who are working in low-income services, in the shops, in hairdressers and restaurants and so on, they had to live far away. Sort of thing that happens in a lot of American cities. And they have long commutes and congested commutes. It's not easy to get into Cambridge in the morning or out by car. So those are the people who tend to suffer here. Whether it slows down the growth of the economy, I think, is a much more moot question. And I wouldn't be one, for instance, who would support a free-for-all on housing development. I mean, somebody like Matthew Parris said it would be a good idea if Cambridge would expand to a population of 2 million. You know, it would be one of the great conurbations of Britain. Well, I think as a conservative, good luck with that one. So
there's probably an ironic political economy argument here where because there's practically no conservative voters in Cambridge to begin with, if you just built 2 million new homes there, the backlash wouldn't actually be that substantial or that major in terms of Tory party votes. You could almost think of it as a gerrymander in terms of where you build homes. I mean, I think the question of permissions is an interesting one. I think people who are of the viewpoint that the planning system isn't working so well would say a lot of those permissions are being granted in places that aren't necessarily where you'd want to build. And the fact of houses not being built can also, this kind of land banking happens because a lot of the planning system is so complex that it's this very small number of large housing developers who manage to get permissions, and then they have an incentive to some extent to hold back the supply. And if we simplified the process, you could have a lot more competition in the sector and a lot more smaller developers being able to come in and compete with those larger developers. But maybe that's kind of a broader discussion about housing. It's quite interesting to have. I'm kind of interested in conclusion what you think. So I think you made that very interesting point that we basically don't have a good idea of the productivity puzzle, as some call it. And we hear lots of different theories about what might be causing it. And you've suggested there that perhaps it could have something broader to do with the kind of structure of the global economy. I'm interested in what you'd like to see from the next leader to maybe look into that issue to try to resolve that issue. Is there a solution in our grasp, or is this just going to be, is it too big a problem in the scheme of things?
Well, having a pro-business prime minister would be rather nice. I think some of Boris Johnson's pronouncements about business were not helpful. I mean, if business and international business felt that Britain was a welcoming place and a supportive place, that's a help. Keep corporation tax competitive. I think it's currently well below many of competitors, and if we put it up a bit, let's keep it competitive, and make sure that public services and infrastructure and educational standards are all competitive. But the problem with this, of course, is that most Western countries are doing much the same and having very much the same discussion. So it's hard to become relatively more competitive, and hard to say exactly what to do there. I have a view, and it needs more work and more testing. I think that we've just gone too far in offshoring our manufacturing. I mean, most R&D and a lot of investment is done by manufacturing companies. So we've become a service sector economy, and service sectors, by and large, have low productivity growth. Not all of them, but most of them. And there's a question, though: why would we, as a country, have transferred our economy from one that was, about a third manufacturing into one that's now 90%, 80-90% service sector, when service sector economies, service sectors themselves have low productivity growth. And I think that was something that was quite good for company profits and therefore for equity holders, but wasn't actually rather good for the country as a whole. And of course, certainly wasn't good for the people who previously worked in manufacturing. Now, some of that would have happened anyway, just due to competitive pressures in open economies. But I think we've gone too far on that. And if we can find ways of rebuilding manufacturing in high-tech sectors, then all to the good. And I think we need the state behind that. I mean, it's not my view that free markets will naturally rebuild a UK economy. Free markets mean that profits will follow lower costs wherever they are. And if we want a strong economy, I think the state has to play some role in trying to rebuild that. High-tech sectors. Some of that's much of that can be in the service sector. I mean, we don't need to forget or neglect the high-tech service sectors, but high-tech manufacturing, I think, must be a significant part of our future. And we've lost so much of that it needs a state to get in there to support a renewal and a new direction.
I might say something slightly in defense of globalization, as I feel almost duty bound to do, which is to say that I think we'll probably become a lot richer as a world of the fact of global trade, and that I'm not necessarily persuaded that the UK economy needs to try to produce things. I'm open to the idea that we've made it more expensive than it needs to be in the UK to produce high value chain manufacturing. And that there might be some issues that need to be addressed in that particular area, but I'm not necessarily convinced. Maybe you'll change my mind, but I'm not necessarily convinced at this point that we should poo-poo the idea that the UK economy is quite globalized, or that a service-based economy is. Obviously, there are some issues in some service-based sectors that are low productivity, things like social care or healthcare, for example, particularly state-led sectors or highly regulated sectors have been extremely low productivity. But I think a lot of people have benefited from the globalization of the British economy and the fact that it is more of a service sector based economy than it might have been in the past.
Well, how would you that? No, that's fair points you make in many ways, but how do you deal with the points that service sectors, just structurally have low growth in productivity?
Well, I mean, I think you've got to try to address. I mean, it's something like hospitality, I think is difficult to address, although McDonald's is upping its productivity by automating away some of its staff by making you do self-checkout. So there's certainly room for improvement in the service sector that can be achieved when there's pressures. And as a consequence of that, you're going to potentially see some boost productivity. I mean, you probably do get quite high productivity in other service sectors, things like finance or the creative sector, that are seem to make a major economic contribution. So I would probably think about what are the ways in which the service sector could be more productive, rather than trying to, I suppose, undo the economic transformations. I'm not sure what the answer to that question is, to be honest, but I probably lean more that way than trying to get back into manufacturing in a large way, or try to subsidize the manufacturing industry. That's, as you know, if you try to subsidize or you put tariffs, it doesn't end up being particularly productive.
Well, obviously our financial sectors and the associated legal and business services are terribly important. They've been very successful to the UK, but they can't make themselves big enough or stretch far enough across the country to be the basis of general prosperity. I mean, they generate a lot of tax income, and a lot of that tax income supports the lower productivity regions further north and west. But that's not really the sort of economy we actually aspire to. We want something where productivity and affluence are more widely spread than that. That's what levelling up is supposed to be about. Again, we haven't got on to levelling up, but again, I'd be a skeptic in the sense that's a pretty difficult problem that's being addressed in rather shallow ways, I think at present.
Yeah, maybe we can come back and get you on your area of expertise in terms of regional economic growth and levelling up in a future podcast. Thank you very much for joining the IEA podcast, Graham. It's been a pleasure to have a chat with you about the state of the election race and the UK economy and some broader thoughts.
Thank you. Very, very nice to talk to you.
Well, if you enjoyed that conversation, why not watch one of these other videos? And while you're here, remember to hit the subscribe button and the notification bell. That way, you'll never miss out on a single IEA broadcast.